So this is problem SF6-4. It's basically going to tie our inventory costing method to journal entries. So I do another example. There's a video that you can watch where I will go through in more detail how to fill out this table. But for now, I'm just going to briefly go through it because really I would just want to emphasize the journal entry part of this whole process. So I'm going to quickly go through this, not really show too many of the calculations, but if you want to have a more detailed look, I suggest you check out the other video I did on all three FIFO, LIFO, and weighted average cost where we fill out this table in more detail. So we're going to start with the starting inventory, which we have given here. And the total cost is just the per unit cost times the quantity. Okay, so next we have a purchase that is going to happen here. So we see here October 16th we purchased 40 at a cost of $68 each. And so 40 times 68 is 2,720. So under FIFO, we're going to keep track of the different layers. So we have this original 12 units at $42 each. And we just bought 40 at $68 each. So our total inventory on hand would actually be the sum of this plus this. But we've broken it out into two different tiers here so we can use our FIFO method more easily because it's organized by the different levels of quantity and unit cost. Okay, so then we made a sale of 34 at $100 each. So with FIFO, we're going to start in the back, meaning the oldest units, and sell them first. So we're going to sell all 12 of these. And then we sold 34. We've accounted for 12. That means we have 22 that we need to basically sell more. And we're going to take those 22 units from this 40 unit layer at $68 each. So again, 12 plus 22 is 34, which is this number here, the number we've sold. And we've broken it out by the 12 units being at this cost and the 22 units being at this other cost. And so that is that. And then how many do we have left over? We used to have 52, 40 plus 12. We've sold 34. So that means we have 18 left over. And they're going to all be the $68. And so that is... Okay, so now our totals, 40... So I basically just, you take the sum of this column, there's only one transaction here, and you take the sum of this column, and in this case there's these two elements, and the inventory on hand is just the ending balance here. You do not take the sum because again, this is a running total. So you just take the ending. Okay, so we've completed this table. So now let's see how to journalize this stuff, or rather what the corresponding journal entries are. So in this purchase of 40 units, the 40 units no longer matters, the unit cost no longer matters. We only care about the total. So we're basically going to be adding inventory, right? It's just like in chapter 5 we learned about the different purchase and sale transactions. And now we're just calculating the different elements of it by unit cost and number of quantity but really we just, for the journal entry purpose, just care about the total, because that's how many dollars we're adding to our inventory balance. And it says we purchased on account, so it's going to be accounts payable. So this should be familiar. This is essentially chapter 5 stuff, but we're now digging one layer deeper into seeing how this total cost came about by unit cost and quantity. Okay, so now we have the sale. So in chapter 5, we were just told the cost of goods sold. We said that we sold 100 units for $100 each, and the cost of goods sold was $50 or whatever it was. Now, in this chapter, we learned how the different methods are used to calculate cost of goods sold for a transaction. So in this case, in this sale, it's going to be the same as we learned in chapter 5. It's asking us to do the sale portion of the transaction. So it's going to be, again, chapter 5 stuff. We're basically going to record the sale portion, which is going to be sales revenue. And let's see, did it sell? I guess we can assume it sold for cash. Oh, sorry, it says on account. So we're going to have an account receivable. And we sold the bicycles for $100 each. So 100 times 34 is 3,400. So this is the revenue part of the transaction. Oops. Okay, and now, just like in chapter 5, we're now going to have to do the inventory expensing. So we're going to have cost of goods sold, and we're going to reduce our inventory balance. And so now, before, again, in chapter 5, we were just told the number. Now we have to go back and look at how we calculated our cost of goods sold. So for this transaction, we calculated cost of goods sold by selling 12 of these and 22 of these. And so this is our total cost of goods sold, and it's $2,000. Again, this is a little confusing because there's only one transaction, and this total happens to be just the sum of this one transaction. But you basically treat this cost of goods sold separately. We're just doing this sale, so we're just taking this plus this because that's how this transaction was broken out, and the total is $2,000 for this particular sales transaction. Okay, and that's it.